All right, welcome to Trading Nation. We're pleased to be joined today by the editor of the Gloom, Boom, and Doom report, Marc Faber himself, by phone from somewhere around the world. Marc, it's always a pleasure to get your insight. Are you, our viewers and listeners know you more as sort of the gloom and doom guy, but are you a buyer of this so-called Trump rally?
Look, we have a lot of liquidity around the world, and we had the sell-off in bonds, and the sell-off also recently in precious metals. So I think that we have to look at markets, at sectors and stocks that are oversold and at voiding sectors that are overbought. The fact is the U.S. market is not quite as strong as the indices would suggest, because as Jeff Mack of CNBC said the other day, or wrote the other day, 90% of the S&P gain since December 2014 came from Facebook, Amazon, Netflix, and Google. So a typical stock hasn't done that well. Now, there has been a lot of selling in emerging economy stocks since 2011. This year, most emerging markets have actually outperformed the U.S. Russia is up 34%, Brazil 64%, Kazakhstan 58%, Thailand 18%, Indonesia 14%, Vietnam 15%. And I think that in 2017, my recommendation would be to overweight emerging economies, and I would also overweight Europe, partly because I think that the sentiment about the U.S. dollar is far too optimistic. I think the U.S. dollar is terribly overbought and overvalued, so I wouldn't go into the U.S. dollar at the present time.
Okay. So you mentioned, let's get into some ideas. You mentioned these markets that have done better than the U.S. Well noted. Are you buyers of those markets, Marc, or are they completely overshot on the upside?
Not really, because some of these markets had performed very poorly before. So if you look at Brazil and at Russia, they have been very miserable performers since 2011, and they just came off the lows. So I think there is still more to go. But currently, I would look at Singapore stocks. I think Singapore stocks are depressed compared to the U.S. And as I said last year, precisely a year ago, when Barrick was around $6 and Newmont Mining around $17, I think that gold shares, after the recent correction, are still attractive. Don't forget, gold has been talked down a lot recently, but the fact is, when you say that gold is a currency, well, it's been the strongest currency on earth this year. It's up 11% in dollars, 32% in British pounds, and in euro 14%. So I don't think it's been doing all that badly, even following the recent correction.
Is it fair to say that you are a little less bearish on the U.S. than you had been? Less bearish? Not bullish, less bearish?
Actually, I think that, unfortunately, and I would have voted for Mr. Trump if I were an American, but unfortunately, I think he's a Keynesian, an interventionist, and that he will print money. He will need to print money massively. That the economy actually in the U.S. is not doing well. Say, if you assume that GDP nominal growth was around 5%, in other words, 2% inflation, 3% real growth in this year or next year. Well, so far, in the last 12 months, the government debt alone increased by $1.6 trillion. So what kind of quality is this growth?
So
very low quality.
Yeah, I hear you. So what then do we do? Without getting sophisticated, Marc, let's say someone watching this is not going to buy Romanian stocks or even the Brazilian EWZ, but if you're just talking to sort of the early investor, what would they do?
Today, I would buy treasury bonds. I think they will rebound. There's a stock, the TLTs, an ETF for long-term treasuries. I think it can go up like 3-4% in just a few days. I would buy gold and platinum. They are depressed, and I would buy the euro, and I would overweight Japan vis-a-vis the U.S., and I would buy emerging markets.
Okay, Japan, gold, treasury bonds, and emerging markets. Marc Faber, some real world, real investment ideas, and we certainly do appreciate that. We're not going to do a segment on Romanian stocks, although maybe we will with you, Marc. That's why we love you. We can talk about anything. Thank you.
Maybe on Indian stocks one of these days.
Yeah, and why they're running out of money. Literally, there's no currency there on the higher end because they've taken it out. But that'll be a different segment, Marc, and we'll look forward to it. Thank you.
Thank you very much.
Thank you. And thank you for watching Trading Nation. Check out the live version in CNBC's Power Lunch. I'll see you there as well. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.